Since its 2009 launch, Bitcoin's price has tumbled more than 50% 6 times. Coinbase CEO Brian Armstrong, in a June 14 letter announcing an 18% staff cut, offered assurance despite the latest Bitcoin crash and walloping of other crypto prices. Armstrong said the cryptocurrency exchange has survived through 4 major crypto winters and is taking the steps needed to do so again. And today, Bitcoin, Ethereum, and other major cryptocurrencies have turned negative. The Bitcoin price, dropping back toward $20,000 per Bitcoin, has crashed more than 70% since hitting a peak of almost $70,000 late last year, with China warning it will eventually fall to zero, while the Ethereum price is down almost 80% in a crypto market meltdown that some think could reveal the future giants of technology. Now, analysts at Wall Street giant Goldman Sachs have downgraded crypto exchange Coinbase to sell, warning the company could be on track for further degradation even after a devastating 80% price crash. The period since Bitcoin's launch has mostly seen the Fed trying to prop up demand. Over that time, the Fed bought up to $6.5 trillion worth of treasuries and government-backed mortgage securities that suppressed rates in a bid to encourage risk-taking, boost asset values, and stimulate demand through wealth gains. The bulk of those Fed purchases, $4.5 trillion, came after the COVID-19 lockdown cratered the economy in March 2020. However, multiple rounds of fiscal stimulus, ultra-easy Fed policy worked only too well. All that monetary fuel supercharged the vaccine-enabled economic reopening and touched off the biggest bout of inflation in 40 years. Now the reversal of unprecedented Fed stimulus is deflating most asset values. The surge in the 10-year Treasury yield has hit growth stocks in particular. Their future earning streams are less valuable when discounted to the present, based on a higher risk-free rate of return. That helps explain why the tech-heavy Nasdaq has underperformed the broad market. But when it comes to valuing Bitcoin and other cryptocurrencies, there are no future cash flows to discount. In recent days, this Bitcoin price crash crossed a line that previous bear markets and cryptocurrency prices didn't even approach. Bitcoin tumbled as much as 75% from November's record. At its worst, in early 2015, Bitcoin's low was nearly 40% higher than the previous peak. Bitcoin's gains over the past 4.5 years is challenging the notion that long-term holders can't lose. That will test the faith that ultimately determines the value of all cryptocurrencies. That faith probably has limits, yet it clearly runs deep. Nearly 50% of Bitcoin traders on Coinbase say they won't sell, no matter how low cryptocurrency prices go. What separates Bitcoin and most other cryptocurrencies from being mere collectibles is their utility for conducting transactions. Progress on that front has been slow. To some Bitcoin believers, like MicroStrategy CEO Michael Saylor, who bet $4 billion of company funds on the cryptocurrency, the shakeout is overdue. What you have is a $400 billion cloud of opaque, unregistered securities trading without full and fair disclosure, and they're all cross-collateralized with Bitcoin, Saylor said in an interview hosted by the Northman Trader market analysis site. Saylor's perspective may shortchange the role of Fed tightening and the extent to which the need for collateral to fuel crypto speculation helped boost Bitcoin's price. Yet, inflation will eventually recede and the Federal Reserve will end its tightening cycle. But the central bank is unlikely to return to a sustained super easy monetary policy anytime soon. A new crypto spring will eventually arrive. Just don't expect it to be anything like the prior ones.